But one space that has been doing quite well is Tyre. So we had some good earnings come through. In fact, JK Tyres, although the stock is under pressure, the numbers were not bad. It was a 10% revenue growth that the company saw. They ended FY23 with a growth of 22% on the top line. And the margins have improved as well, even in Q4. So let's find out more from the company. The India business has been doing well. I think the pressure is coming into the Mexican business. The EBITDA is still under pressure. You have Anuj Kathuria, who is the president India at JK Tyres, joins us now. Talk more about that. Anuj, thanks a lot for joining in. Just tell us a little more about how the new year is expected to shape up, because FY23 had its own set of challenges, but demand came back, and you ended the year with an 22% growth. What can you do in FY24?
Thank you for having me here. The year that we just closed, the results were announced yesterday for Q4 and the year as a whole. As you rightly said, that for the year as a whole, we saw a growth of 22% in the top line, a consolidated revenue of 14,681, which was the highest ever for us. Q4 also was a good quarter, where we had a revenue growth of 10%. More importantly, the margins were there. In Q4, we posted a double-digit EBITDA. So going forward also, we see that the demand is quite buoyant, both in the commercial vehicle segment and also in the passenger cars. So we expect that we should be seeing a double-digit growth in FY24 as well. Specifically, there will be some of the segments, maybe the commercial vehicles will be doing a little better than the passenger car. But the demand from the passenger car, both OEM and replacement, is pretty strong as of now. What we hear from them is that their challenges, especially with respect to the semiconductor, is kind of behind them, and they are having good plans. So therefore, we expect that even for us in the tire industry, the overall demand should be quite buoyant.
So can you give us any number? The double-digit growth would be what? I mean, are you looking at 10%, high teens, 20%? What would the realistic growth be for you? And also, I mean, just to follow up to that, you have some Capex coming on board as well. You're increasing your truck bus radial and your PCR Capex. When will that come through? And once that comes through, what could the growth be?
So, the GDP growth is expected to be around 6.5%. So if that is going to hold up throughout the year, we expect that definitely we should see a growth of anywhere between 10 to 12% for the industry as a whole. And maybe the passenger car may be a high single digit, but the commercial vehicles should be doing better, I'd say around 12 to 14%. The Capex that, yes, we had announced the Capex expansion programs that are well underway, both for the passenger car radial and the truck bus radial tires. These capacities will come into being in the second half of the current financial year. We will start realizing the capacities, and we will have a ramp-up phase. And by the end of this financial year, we should see a complete realization of the entire capacity. So definitely, we expect that the Q3 and Q4, when the demand generally goes up, we would be having these capacities available for us, and we would be able to realize this. In fact, as of now, in the passenger car, we are having a very high capacity utilization, and we expect that even with the additional capacities that would come in, the capacity utilization would stay at that high level.
Hi, good morning, Mr. Kathuria. So double-digit growth is what we are penciling in for on the revenues. But I have a two-part question, and the street would like to know the sustainability of this. One is on the margins. They moved into double digits. What is the rough margin band we should be looking at? That's point number one. And the second factor is on debt. I think the debt in the books was around 5,000 crores. And you said by 2025 in the past that it's likely to come down, I think, to around 3,500 crores. What's the debt reduction plan, both on margins, if you could tell us, as well as net debt? Go ahead, sir.
So let me first answer you on the debt part of it. We were at a level of close to 5,000, a shade under 5,000. Now we have brought it down to around 4,500 crores. And we expect that going forward, as we had earlier mentioned, by 2025, we should be able to get it down to the 3,500 mark. So this is well underway, and we have made the desired progress. And we expect that even in the current year, that is FY24, we would see further reduction in the overall debt.
Okay.
And we would
and margins?
On the margin front, yes, the raw material prices as of now, thankfully, they are quite stable. We saw stability coming in Q3 last year. Q4 saw a reduction. And we expect that going forward, the prices, the raw material input cost should remain stable. Crude is as of now not kind of very volatile. Even the other raw materials are stable. So we expect that if this trend continues, there should be a further improvement in the margins.
Okay, I have to ask you what the long-term plan is with the Mexico business. Now, the reason I ask is that, that business has been struggling for a while. Even in this quarter, the EBIT has actually fallen at a time when your domestic business is doing quite well. At some point, do you look to maybe hive off that business, sell it off? What is the long-term plan there?
The business is doing quite well. In fact, my colleague who takes care of this business, we have understood that this business is quite steady. And we actually, the demand over there is, in the domestic market is looking up. And we expect that going forward, with the global scenario getting better, I expect that this business should start doing better. In fact, it has also posted the highest ever revenues. And also the margins are improving. So there is no reason for, to think that this is not doing well.
Okay. All right. So no plans to sell it?
No, nothing as of now.
Not planned. Okay. All right. If you could just clarify on this debt reduction plan, will there be some more equity that you'll be raising, or will it be from the cash flows that you'll be reducing? And also, if you could give us your rough market share in the domestic market.
See, on the market share, it is different in different segments. In the commercial vehicle, especially in the medium and heavy commercial vehicles, if we take both the OEM as well as the replacement market put together, we are almost, the market leaders in that. In the PCR, we have been gaining share. There are, it's a crowded market. There are other than the Indian manufacturer, there are the MNCs also there. So there again, we are working on it, and year on year, we have been improving our share, both in terms of OEM as well as in the replacement market. Going forward, we expect that there will be further improvement. The growth that we are talking about, we expect that we will be able to grow a little better than the growth in the industry. So thereby,
you want to clarify on the debt reduction as well? Will it be via some more equity issuance or from cash flows?
Recently, we had this,
Yes.
we got the 30 million from the IFC. So that has already come in. We are not having any immediate plans on it, but we can't rule out the possibilities. We will be exploring. But as of now, we feel that the debt reduction would be a combination, mainly from the internal accruals. We will be working towards that. We have done certain reduction in the past. Also be looking at certain other further capacity expansion as we go along. So it will be a combination of various things. So when we talk about the net reduction, we will be working on it. And when we have our plans ready, we will be definitely sharing with all of you.
Okay. All right, Mr. Kathuria, appreciate all your thoughts on the business and all the best for the brand new year. Appreciate your thoughts. Okay, just one final question before we let you go, Mr. Kathuria. You said that at some point you would be looking to raise funds, maybe. Is that because I think those fundraising plans have been a part of the overall plan for a while. Anything that you're looking to do in this calendar year itself?
I would like to kind of just tell you that we will let you know when we have such plans. So we are still working on them.
Okay. Okay, still working on the fundraising plan, so nothing concrete just yet. Got that. Thanks a lot for joining in. So that's JK Tyres. Very bullish, actually. They're saying they expect double-digit revenue growth. New capacities will be kicking in Q3 and Q4 onwards. And they've brought down their debt. That's a big thing. Their debt earlier was almost 5,000 crores at the end of FY22. It's now 4,500 crores, and they plan to bring it down further. And that's something that the street would always like. But the stock is perhaps seeing a bit of profit taking at the moment.